Hey, what is up, everyone, and welcome to Market Psychology 101, where we look for value in the markets when there's fear and are cautious when there's greed. In today's video, we're going to be taking a look at the stock market, different indicators, and seeing how is the stock market liking or not liking the Fed announcing 50 basis point rate cut yesterday so far. And as you can see, the S&P 500 already moving into all-time high area. So as far as the S&P next target as it's moving up, you can see overall since the GFC, the Great Financial Crisis, the S&P 500 has been in this upward channel. Now, there are different parallel channels you can draw within this channel, but from this point, which was the last peak before the dip in 2022, you can see there's another peak here, and that would just be my next target, somewhere around the low 6,000s, should the S&P continue to run hot. As far as the max area of that zone, if you're curious, and yes, the S&P has run into this. That's been the height of the channel ever since the Great Financial Crisis. You'd be looking at something around, maybe we have to draw by the time it gets there, something around the high 6,000s. So just something to keep in mind, that if the market does get into even more of a bubble territory, people are comparing this AI bubble with the dot-com bubble, you'd be looking in that 6,000 range, low 6,000 to high 6,000. Let's go over to fear and greed quick before we jump into all the other charts. So you can see we were into fear not too long ago, and so far since that 50 basis point cut, the markets are liking it. We are up into greed on the CNN index, and on pie vesting, it is touching the extreme greed area. Something that I want to keep going over it just because it's worth going over is that as far as the average of bull markets or bear markets versus the Fed rate cuts, this is just the average of whether there is or isn't a recession within a year of the Fed cutting rates. I've been talking about how the S&P 500 has resembled more of this dark green line average. We even had that 10% sell off. It was 9.5 with all the yen carry trade stuff. So I'd not be surprised to see it go higher. And as far as what's happened in the past, when the Fed, this is just worth throwing out there, when the Fed has cut by 50 basis points to start, typically that hasn't been good in the near term. Now, the Fed may not cut rates at all next month. And in fact, I don't believe they have a meeting in October. So you could argue that that's really more of a 25 basis point average. So try not to get too obsessed with this number. At least I'm trying not to. Not financial advice for you. But if it is starting out by a 25 basis point average, and if the Fed isn't going to over aggressively cut, maybe they're looking to hold somewhere in the 3% range, I would compare that more to 98, because 98, the Fed did not cut completely. Let's actually go over to that chart. So if you want to look this up, just you type in US INTR, US interest rates, and you'll see that the Fed has cut all the way down the last two times from the top of the Great Financial Crisis and before COVID. People were saying there's going to be a recession here anyways. This was the dot-com bubble burst. The Fed cut down to 1%. But when they first cut rates in 98, people are already saying there's a bubble in here. When they first cut rates, they stopped and held. So the Fed is talking about, I believe, cutting by 75 basis points more by the end of the year. We'll see if that happens, but just something to keep an eye on. We'll see. We'll see it. We'll see if that happens. Let's go over the VIX volatility index. We had that recent spike, and it has come down since then. So I've made the argument. I think this is a warning shot. The last two big spikes the VIX had that were higher than this was the COVID crash and the GFC. So if we're getting spikes this high, then I think there could be increasing volatility to come. The markets, the way it's reacting, reminds me more of a late cycle overall. We have this AI bubble that it really hasn't totally had a blown off top. There's the crypto cycle. I do videos on this every week as far as the rainbow chart and how it goes in cycles. So there's still on average about 6 months to a year left in an average crypto cycle from prior peaks. So just something to keep in the back of your mind that if we are in a 1998 style scenario, things can still run for a year-ish, give or take. And that's kind of the thesis I'm going with. Let's go over to the VIX divided by the VVIX. So if you don't know what the VIX is, it's volatility of the markets. The VVIX is the volatility of the VIX. And when you put the chart out this way, when it's dipping down here, that tends to be tops in the market. But when it's peaking, that tends to be good times to buy. And I slap on buy sell signal indicators. It's just a way for me to look at, okay, are we closer to getting to peaks, or are we on our way to maybe some sell-offs? And as you can see here, VIX divided by the VVIX, there's that sell signal, so that I would say the markets are going up, which you guys know. The yield curve is going up. It has broken the zero line, and something to note is that we talked about this in yesterday's video. The last number of times the yield curve is uninverted, it's been an average of 6 months to 2 years. Again, that's the average. I think the great financial crisis, when the yield curve uninverted, the bottom of the market was 2 years later. But it's these red lines, by the way, are the bottoms in the market. So it's been an average of 6 months to 2 years after the uninversion of when the bottom of the markets is. So I know a lot of people talking about the yield curve inversion, myself included, but all because it's uninverting, does not mean a recession is imminent. So this is called it the last number of times, and again, 6 months to a year. I believe in 1990, it was happening as it was uninverting. So there's still some leeway, and again, I still think this goes along with the thesis of us being in a late cycle and this being the dot-com bubble. Something else I talked about yesterday, let's get this looking better. Bitcoin. So it did a couple important things. It has a weekly buy signal. That's a pretty big deal. Also on the stochastic RSI, these are just a couple indicators I use as when there's good indicators of when the dollar cost average in. When the blue gets above the orange on the weekly, tends to be a good area to DCA. So just know stochastic RSI, flip positive, we have a buy signal on the weekly. And then there is, let me just add that buy sell signal back on. And as far as the daily, this can show it better. Broke this little trend. Now, I didn't draw my trend line perfectly, doesn't matter. But the next area for Bitcoin to get past, if it gets past 65K, that's going to be really bullish for Bitcoin. So look out for that 65K number. Let's go into the mags, 7 stocks. Guys, you can see right here, the top stocks are reacting quite well to this news. So things are looking green. We'll see. I think overall the markets would react positively to this. But again, give it a few days. I'm not ready to declare victory quite yet, but so far so good. NVIDIA in this wedge pattern has a weekly buy signal. Flip that red one quite quickly. And guys, you can see, I throw in the Heikin-Ashi candles in order to cut out the noise. I'll show you what regular candles look like. Just way more messy, okay? But if you throw on the Heikin-Ashi candles down here, and let's go over to the weekly. Sorry, I was on the daily there. Here we go. My bad. So the weekly, we had 2 weeks of a sell-off. Now we're getting buy signals. So right above that 382 fib. And by the way, again, the way I draw fibs, if you are looking at recent bull run, and after it's made a decent sized correction, you go low to the high, and that usually tells you a pretty good idea of where it's supposed to, or where the fib levels are. So you can see the 236 is at 121. Let's take a look at the daily. Daily to me is always showing more accurate as far as moving averages and fibs as far as the trend. So you can see it really like that 100-day moving average. Got to the 50, had some nice support. Now it's ready to go up. So 121's next, and if it gets past that, you want to break this lower high structure And like Bitcoin, if these stocks are breaking lower high structure, to get bullish, 131 would be the next target for NVIDIA. Excuse me. But of course, you can see some of the fib level supports down here and that 100-day moving average at around 110. So let's go over to Microsoft. I would assume this would be a buy signal. Yep. So it's a buy signal, and it looks like it wants to revisit prior all-time highs at around 467. Gets past that, then sky's the limit for Microsoft. So yeah, here we go, past 236 fib, and yeah, I'd say maybe the next area of resistance somewhere around that 450 range, and then you can go from there. Guys, just I try to make my videos educational for people and answer the essential question: is now a good time to buy? What value can I get out of the markets? And I've already told you about, maybe medium-term investment fears, possible recession. Just I'm investing more defensively, as not aggressively, at least with stocks. Crypto, I believe there's much more potential this late cycle of investing. But the way I look at it is this: market cap of Microsoft, Apple, NVIDIA, they're all around 3 trillion. So if you put in $10,000, you want this to go to somewhere like 6 trillion in order to double your money, 10K into 20K. So just know the larger caps, yes, they can be safer, but late cycle investing, and with how hot these have run since late 2022, just know that becomes more of a risk. So as an asset is closer to its all-time highs, I'm not looking to dollar cost average in at those levels. Along the way, if there's something you really like when it hits these lower levels, the moving averages, the fibs, or when it does that and the stochastic RSI flips, that's when I'm personally looking to get into, increase the value. So I don't think it's a great time to buy. Not that I don't like Microsoft. I think it's a great stock. But I wouldn't be putting it in here. I don't think you're getting the best value, and that you would be chasing the news, the positive news with rate cuts and everything. So time to buy is when the news was bad. Apple, speaking of, got down to this 100-day moving average last time at its most recent low, and then you can see here, crawled up, had a nice bit of support off the 236 in the 50-day moving average. And again, like NVIDIA, like Bitcoin, it has to get above this 233 number, give or take, in order to, I think, confirm bullishness, and then, of course, challenge the recent all-time highs. So that's a big green candle on the daily. So the market's clearly, so far, liking this rate cut news. We will see, but I think we might see some bullishness off this rate cut news just in the short term. We'll see what happens after. Hopefully it's not a bull trap, but I'm not getting that sense right now. Amazon challenging this gray line, by the way, is another way to draw your fibs. So if it's within the range of prior highs and lows, you can draw a macro fib. That's this right here from the high to the low, and take a look at the different fib levels in between there. You can see that Amazon, once again, for like the 7th time, is challenging, and it is peaking above that all-time high area. So if it gets there, it could stay above 200 would be your next bullish target. And as far as late cycle investing, if you're looking at a good area to take some profits, if you do believe a recession is coming in a year or two and lower prices, this 1618 fib at 255 would be an area to target. So I hope you saw I did that. Look at the charts on the log and have my fib on the log scale. But when you take it off log scale, excuse me, when you take it off log scale, you can see the 1618 at 255. So that'd be a target, give or take. You don't have to wait for 255 exactly. You can wait for 250 or whatever. But that would be an area I would hope for, if I'm an Amazon investor, for it to get to. Let's go over to Google. And Google got down to the prior all-time high line, as you guys can see. Had a bounce off not only that fib, but the 50-week moving average. So Google, you can see that 1618 fib. I believe This looks like it's off log scale, but let's just confirm. Yep, it's off log scale. 193, that's our target. So you want Google, have a nice bounce, get to 193. Almost got to it last time. And some early profit takers. So right now it is in this downtrend. If it were to continue downward, then you're looking at this 100-day moving or 100-week moving average. Sorry, 142, and that 786 fib at 137. But with the way the rest of the market's going, if the rest of the market's going positive, I would not doubt that Google might go along with it and resume with the rest of it. Meta, let's see what Meta is doing. So Meta, we've been talking about this. It's been kind of funny or curious to me. Like me personally, I find more everyday use and value out of many of the other stocks. But as far as Mag 7 stocks, I can't deny it. Meta's been holding up stronger, and it's been staying above or at or above the 20-week moving averages. That's the red lines, the EMA, the SMA. It's looking for that 1618 at 568. So, excuse me. So should it get to 568 and run above, then we're really cooking. And the 2618 would be around 864. So do know it's one of on the lower end of market caps of the Mag 7. We have the 3 trillion guys up here and the 1 to 2 trillion guys right here, Amazon, Google, Meta. So some of these lower cap ones in late cycle investing in a late cycle of an AI bubble, you can, I think, look for some slightly better targets. So that 2618 area around 864. If we break 568, I think Meta can turn on the afterburners. Even though, like me personally, when I think of stocks to invest in, do I see Meta as a great company being around in 20 years? Like it's one of those I'm not so sure as I am with like Google or Amazon. Tesla. Let's see how Tesla's doing. So we've been talking about this wedge formation it's been in, how it's been peaking above it. I talked to you guys before about how in the monthly candle is broken above it too. So is that bullish? We'll see. You can see it's challenging that 2618 at 241 or getting up to that level of 241. So it needs to get above this 618 fib. You can see there's a lot of price structure before, and then next getting above this 271 level. So Tesla 241, and then if it gets above 271, heck, this 786 fib up here at 306. So Tesla, to me, is more of a risky stock to invest in. I look at it this way. I'm not saying Tesla can't run, but I look at it this way. If you look at the top stocks that are traded every day, Tesla and Nvidia are 2 of them, and sometimes the top traded stocks, even though they're not by market cap per se, there's not always the correlation market cap to what the stocks with the most calls and puts are. I think that does artificially inflate its value. So in a recessionary environment or going into a recession, I'd be most worried about a stock like this. Again, not that this can't run super hot into late cycle AI bubble type of situation. I would just be careful with it. The way I view Tesla, and again, I don't own any, but its market cap is like 15, on average 15-ish times higher than Ford and GM, and over 90% of its profits are as an automotive company. So it's 15 times the size and market cap, and as far as revenue, last I checked, is half the amount of Ford and GM. So half the revenue, but yet 15 times the size. So people are really looking at this as the future of cars and all this and that. Maybe one day if we all have self-driving cars, Tesla will be the leader in that. And if that's the case, are you an early? Maybe. But I still think just overall for a car company compared to other ones, what it's worth, to me on the surface still a little rich for my blood. But if you like Tesla, you love it here. We've been talking about when it was at the 100-month moving average or whatever down here. And it's been going up. So sometimes you just got to take the charts for what they give you. But in my opinion, as an investor, my essential question is always like, is it overvalued, undervalued? Is it going to be around in 10 years? Just questions like that. And then I look at different indicators for value. And I just have some questions when it comes to Tesla. But nothing against it, nothing against their company. They have a great balance sheet. So if it wasn't a car company, and I saw all the other numbers there, I'd love this stock. But the fact it is a car company gives me pause. So, anyways, yeah, so far market's really liking the rate cuts. So we'll see how this continues in the future. Do invest with caution. Don't invest more than you can afford to lose. And guys, I also have a budget that I pull from as well. So just be safe and don't overextend yourself. If we are getting into euphoric times, again, market psychology, what I want to encourage you guys to do is, make sure you have a plan and don't let the emotions of the news and the market dictate your emotions. So you have to stick to your plan. And as great as things are, as much as you're going to want to possibly put in more as markets get hot, that's not the time to buy. This is why people buy tops and sell bottoms. So be careful buying the euphoria, buying the greed, as we talked about. Be careful if the markets are going to run hot for the next 6 to 12 months, whatever. Be careful with your investments. So thanks for watching, guys. Have a great day.